Let's start first off with the one that I think investors are most focused on, which is the decision to buy back up to $5 billion in high-yield bonds. These were bonds you took out at the beginning of the pandemic to ensure liquidity. This is a big move, and a lot of people say a smart move. Does it get you closer to investment-grade rating?
Yeah, absolutely. We think so. We're executing our plan. You're seeing that come through the performance of the business. And so now it's time to deleverage the balance sheet, reduce our interest expense going forward. And with that, we think it's another good step towards investment grade. So absolutely, it's a positive for us.
John, your capital expenditures over the next 4 years. Now, you've already said you're going to put $30 billion approximately into electric and autonomous vehicle development and manufacturing. $15 billion of that is capital expenditures that you guys also announced last week. Is this the high watermark, or do you look at this rate of investment and say, we don't know what the future holds, but we're pretty certain we're going to have to continue investing at least at this rate once you get back beyond 2025?
Yeah, I think that's just it. We're going to invest whatever it takes to drive our growth initiatives on battery electric vehicles and our connected vehicles. So right now, we've announced the $30 billion for BEVs. We said last week that we'd invest half of that would be in capital expenditures. And what you're going to see is a run rate of roughly about $7 billion a year in cap expenditures. Now, if we need to invest more because we have good growth opportunities that we think will give us a great return, we'll do that. We're not capital constrained. We have the money to invest in our growth initiatives. And as you see now, we're going to work on the balance sheet and deleverage that. So we're going to make the moves we need to make to drive this growth plan and continue to execute our Ford Plus plan.
John, the other piece of news from you guys this morning is essentially an ESG financing plan. Basically, you guys saying, hey, we've got a framework for funding future environmental and sustainability investments, including potentially issuing up to $1 billion in a green bond. Is that how you're going to likely pay for some of these EV and AV projects in the future?
Well, a lot of the funding for our investments will come from free cash flows in our operations. But this framework that we've announced, the first of a kind for a U.S. OEM, is really positive because we get to tie our sustainability plans and actions directly to how we're going to approach the capital markets. And we'll have transparency straight through to what actions actually underpin any financings that we take around clean manufacturing and clean transportation, or work we might be doing to, makes people's lives better in underserved communities or improve communities around, our footprint areas where we have our facilities and our offices. So we really see this as a positive framework because we're seeing a lot of interest from asset managers in this space. And so with this framework, we think it's going to be a positive for us to be able to satisfy the needs that they have and also bring us some lower cost financing for us as a company and lower our overall cost of debt.
Hey, John, it's Deirdre. I wonder if Ford can move even further down the supply chain model like Tesla has done by producing potentially your own parts and potentially batteries. Do you foresee even eventually skipping the dealership model to increase your margins?
So when you look at what we've learned from the chip shortage, we're definitely going down into the supply chain. We're understanding where capacities are down at the fab for semiconductors. We're looking at securing our capacity down at that level and then working back up through the supply chain. So you're seeing that on, semiconductor chips, but we need to look at memory chips. We need to look at batteries. All of our advanced componentry, we are going to go much deeper into the supply chain. And we'll even look at vertical integration if we need to, if we think that's the right move for the business. So we're busy changing how we're looking at procurement, how we're looking at design, learning from this situation and making those adjustments. So I think we'll have a much better approach as we move forward.